Right, good morning grade 10s. At this point in your syllabus, you should have finished drawing up all the different journals that you've got, with the exception of the general journal, and maybe you might still have the wages and salaries journal still to do. Now, at this point in front of me here, and these 7 journals have got very specific requirements as to when you use each journal. A transaction will fit into one of these journals only and cannot fit into the other because the rules are quite specific. Now, I'm not going to go through each one of these things, but I'd like you to freeze the frame and just for yourself, just to read through and make sure that you fully understand this before I then go on with the general journal. Right, now having looked at those rules of those journals, what we're going to find is that there are some transactions that take place not on a regular basis, but they do happen in a business and they don't fit into any of those journals. For example, we've got a debtor, J. Smith. Now in the debtor's ledger, he's got a balance of 100 Rand. He would be one of your debtors who are in that debtor's control total of 10,000. Now let's say J. Smith goes missing and you can't find him. Prudence will tell you that you must be realistic, and after a period of time you need to write off his account. You don't want to show somebody in your assets if you're not likely to get the money from him. And so we write off what we call a bad debt. Now that means that I'm going to have to cancel J. Smith's account of this 100 Rand because I don't want to show him as owing me the money. So although J. Smith or the debtor's ledger is not part of your double entry, remember, we will make an entry in J. Smith's account and we will say a bad debt. Now he's a debtor, so he's got a debit balance, so I'd have to credit him with the 100 and bring his balance down to nothing. Now that is an expense to the business, it is a loss to the business. But we still have to record it because we have to be realistic in our books. This doesn't mean that you're not going to carry on trying to get the money from him. Now, remember that this is not part of the double entry. So if you have minused it out of J. Smith's account, you're also going to have to minus it out of the debtor's control account. So in the debtor's control account, we're going to have to minus because we're losing some money. So we'll have to have bad debts here of 100, and we will then have to open up a new account to you, an account that you haven't seen before, which is a new expense account called bad debts, and because it's an expense account it'll get debited and the details will be debtors control. Now remember, although I'm abbreviating because I'm trying to make this page quite big for you to be able to read on the screen, please, you don't abbreviate, you write debtors control out properly. Now, that writing off a bad debt does not fit into any other journals because there's no money being received or paid. Nor are you selling any goods. You've already sold the goods, and definitely you're not buying goods. So that would be an example of one that we'll get to the general journal, and I'll move into that in a minute. Now, let's say that we've got another debtor, J. Brown, and J. Brown owes us 500 Rand, but he's taken months to pay for this. And as most businesses will have a policy that will say that if after a period of time you don't pay, they're going to charge you interest. Now just answer me this. If you're going to charge interest, is that account going to increase or is it going to decrease? Yes, well obviously it's going to increase because you're charging him interest. So let's look at J. Brown's account. He also would be a debtor, so he'd have a debit balance. So we're going to bring in a new entry called interest, and let's just say for argument's sake we're not going to calculate percentages now. We're charging him 50 Rand and interest. His account will now go up to 550. We have increased his account, but remember the policy, although you've made the entry in the debtor's account, this is not part of the double entry, so this would have to also go into the debtor's control account. But this time we're increasing the account, so we would have to add on to our debtors and we would have an account called interest. Now you might remember doing this in grade 9 because it actually did come into your grade 9 work when we were doing just straight ledgers before we got into journal. So now you're going to have to open up a new account, but this one is an income account because you're gaining. So you would have to credit the account. Double entry, you're debiting the debtor, you're increasing his account, and you are crediting an interest income account. And again, please, I'm just using the abbreviation, debtors control. Right, so there's a second example. So the first example we had was a bad debt where somebody does not pay and we write off. Second example is somebody who also hasn't paid, but before we decide to write him off, we decide to charge him interest and see if that will hopefully encourage him to pay the account. Now again, if you ask yourself, could this interest have fitted into any one of the other journals? And you're not receiving cash today, you're only charging him. So you can't put it into your cash receipts journal, and obviously it doesn't go into cash payments. It also cannot go into the debtors journal because there's no sales. There aren't more goods associated with this. This is increasing his account for something over and above the sales that he's already taken place. So again, this interest cannot appear in any of the existing journals. So it's going to be another transaction that we will have to bring into the general journal. Now we're going to look at a third possibility. We've got another debtor who owes us 600 Rand. He paid us. This has already taken place, so that's why I've already recorded it. He paid me, so I minused out of his account 550, and we gave him a discount of 50 Rand, and his account went down to nothing. Now you've already handled dishonored checks, RD checks, and those would go into your cash payments journal. You're not going to write him off as a bad debt at this stage. You're going to try and get the money back from Jones. But you haven't received the money. And so you would have to go to your cash payments journal and you would have to reverse this 550 over here, bank from the cash payments journal, and you'd add on the 550. Now that entry we've already done, and it does fit into the cash payments journal, and therefore you would still keep doing the entry into the cash payments journal. But what we've ignored up to this point in time is, if I originally allowed that debtor discount, is he really entitled to the discount at this stage now? We gave him a discount because he was paying us, but he hasn't paid us. So to be realistic, we need to cancel that discount as well. Now we're cancelling a discount. We can't put it into the cash payments journal because this was discount allowed. The cash payments journal has a discount received column in it. We're also not paying out any money here. So we can't put it into the cash payments journal. We're not receiving money. We're not selling any goods. We're not buying any goods. So we again have to cancel this 50 Rand. We're going to have to add it onto the account. And we will say discount cancelled. He's not entitled to that discount, and his account will go back up to 600 Rand, which is the realistic figure that should be there. Now again, if you've done the entry into the individual accounts, you're going to have to do it into the debtors control account. And so your debtors control account will first of all have been debited from the cash payments journal with bank. So that part of the entry is not something new you've done before, and you'll carry on doing it as you've done it before. But what is new is I'm going to bring in another 50 here, and this is my discount allowed that I am cancelling. Now when you allowed the discount allowed was an expense account. So the double entry, when you originally allowed the discount, when you gave him the discount, you would have said, right, I'm incurring an expense of 50 Rand from the debtor. We would now have to cancel it. So just like I added back onto the debtor here, I will cancel by crediting the discount allowed account, and I've cancelled it, so I've no longer got it. I hope you're seeing the picture now. I'm only doing rough T accounts at this stage, but I'm just trying to show you some examples of transactions that up to now we've ignored, but they don't fit into any one of the other journals. The first thing is, if any of those other journals are applicable, you must use them. What we're going on to now, the general journal, is like the last resort. If you cannot fit it into one of those journals, then you'll use this journal. I mean, it's not every day that you're writing off bad debts, or we hope not. It's hopefully not every day you're charging interest and that debtors are dishonoring their checks. Right, now another transaction that could take place is that the owner takes drawings when he takes things for his own use. Now, we've already dealt with entries when the owner took money for his own use. So he's taking money out. He could either be taking it out of the bank account, the cash payments journal, or he could be taking it out of the petty cash journal if it was just taking a little bit. But let's just take the example that the owner takes 600 Rand for his own use out of the bank. Well, obviously your bank would be going down. The bank is paying out money. So what journal would that fit into? And obviously the answer is it would fit into your cash payments journal, because there is money going out of the business. The business is paying money, and so it would be in your cash payments journal. And so you would have in your drawings account, bank, CPJ, 600 Rand. Right, now that's an old entry, and I'm not going over it any further because you've done it before. But now, the owner doesn't only take money for his own use, but he might take trading stock, he might take stationery, he might take some consumable stores. He can take anything out of the business for his own use. Now, let's take an example that he's going to take 800 Rands worth of trading stock for his own use. Now, you've got an account for trading stock, which would be an asset. Your trading stock is going down, so you don't have that trading stock any longer. So you're going to have to minus it out of the trading stock account. And if the owner is taking it, anything the owner takes for his own use has got to go to drawings. So we would have into his account trading stock 800 Rand. But what journal could that entry have fitted into? There's no money changing hands at all at this stage. So you can't put entry into cash receipts or cash payments. It's trading stock that is changing hands. You also can't sell this. You're not selling this. So you can't go to the debtors journal. There's no sales and cost of sales. The owner is not selling to himself and making a profit out of it. And obviously he's not buying, so it wouldn't be in the creditors journal. Now this is an entry that also will have to go into your general journal entry. So here's another one. So we had 3 entries over here, and this would be the 4th entry when the owner takes trading stock, equipment, stationery, or anything else for his own use. Now, the last of the uses that I'm going to look at now, the transactions that go into this general journal that we're going to be writing up in a minute, is when there are errors made in the books. Now you must remember, it's very easy for you in class to take a rubber and rub out your entry, or to take Tipp-Ex and Tipp-Ex it out and change it. But in the business world, this is not allowed. And if you're working on any computer program, once you've actually entered it and saved it, you cannot just delete. It's not like another program where you're working on Word or on Excel where you can just go and delete something. It will not allow you, because that is when fraud has taken place. So if you do make an error, you have to correct it by doing a double entry. Now we've already had one. It wasn't really an error, but for example, when A. Jones paid us, the money went into the cash receipts journal. He then didn't pay us, so we wanted to cancel it. So we had to put it into the cash payments journal in order to cancel it. Now let's look at another example. Maybe I bought packing materials for 400 Rand, but by mistake I put them into the trading stock account. So part of this 20,000 over here is 400 Rand. That is not stock. It's not something you're going to sell. It's the packing materials. So it's got to come out of here. Otherwise your trading stock that you've got on hand is not going to agree with what the figure's saying. So you'll have to take it out of here. So you'll take it out by putting it on the credit side. And what is it that you bought? To correct it, we'll have to put it into packing materials because that's where it belongs. So we're reducing the trading stock because it's not trading stock, and we're adding it on to packing materials. So your details over here is just a double entry, packing materials, and over here will be trading stock. And of course there could be numerous errors that could be made in a business. As soon as an error has been made, it's got to be reversed. It cannot just be rubbed out or tipexed out. You've got to actually reverse the entry, do the opposite of what you did before. Now, these are just examples of entries that we are going to lead up to going into the general journal. I have at this stage only shown you ledger accounts, because remember, at the end of the day, everything comes back to our basic double entry, debits and credits in the ledger. The journals are only used there to assist us in keeping our ledger, which is our official records. And so these ledger principles of whether you're debiting or crediting are vital when we're going to go onto the general journal. So that's why I focused on the ledger first. What I would like you to do now is to get to grips with that. And if you do have a new era textbook, now please, it's very likely that you've got a textbook that's got a different cover. That makes no difference. There is a new version out, but the entries in this chapter are exactly the same, so don't worry about it. You'll just have to go to question 6.3. And if you work through 6.3 over here, is working through exactly what I have just done with you. 6.3, the entries over here, and that goes on onto the next page. If you do not have this, I am going to just put this in front of you so that you can freeze the frame and you can work through it, and then I will move it up in a minute for those people that do not have the general journal, and they can work on this. So please, there's the first part. Freeze it, unfreeze it when you're ready. There's the second part of the book of the entries. So 6.3.2 at the bottom. 6.3.3 starting at the bottom of the next page, of this page, and going on to the next one. Now, obviously you're going to keep freezing so you can do this, because you can't do the entries as quickly as I'm moving the book here. 6.3.4 is another example. That's an error. And then 6.3.5 are all different types of errors. Now, I would like you to stop and go through that, drawing your own ledger accounts and just making sure that you understand that before we get on in the next lesson when I'll get on to General Journal. Once you finish that, if you have got the New Era textbook, or if you've got any other textbook, there's going to be a section on this General Journal where all this is going to be explained. So you can work on whichever textbook you've got. There's a discussion on each of these entries, and you can have a look at them, particularly if you were found that you were not sure of something. And of course, you don't at this stage probably have your teacher in front of you to ask you. So there, over the next couple of pages, these transactions are all explained, so you can work through it and make sure you understand the principle of the double entry, and then I will get on to the journal.